From Barangaroo Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
And welcome to the COB on this Tuesday. I'm Andrew Gagan.
And I am Tessa Arcilia. Welcome to the program today on another down day, Andrew, after yesterday.
Yeah, we haven't started the new financial year well, have we?
No, it's not off to a good start at all.
We did have a bit of a comeback in the afternoon, though. So there we go. We're currently off around 0.3% on the CBO 200.
Yeah, and I'm just checking the ASX is down around the same, 0.33% on the ASX. And I think we're really being, getting weighed down by real estate and banking stocks today. But we did see a bit of offset, I think, from the impact of energy stocks.
Yeah, certainly energy stocks doing well. Coal in particular on fire, dare I say it, at the moment. Part of that because, the local coal stocks have benefited from Anglo American shutting one of the mines in Queensland just for some risk events at the moment, but also, I guess, more globally, demand that we're seeing across the board at the moment.
No, absolutely. Okay, well, let's have a look at our three themes of today. Let's start with deadly error. This came in late in the afternoon.
Yeah.
It's an interesting story. So ANZ getting into some trouble, hot water, because it was found that they have been charging dead customers.
People. Yes.
Not
a good look, is it? And you wonder how they got away with that for so long. Obviously, complete oversight on the bank, but they have apologised for it nonetheless. Not the first to do so either.
No, not at all. And what about Superstock? Superstock referring to Superloop today. There's been some news, Andrew.
Yeah, in fact, it's had an update and it's off to the races. So I think Superloop's actually reached a record share price today as a result.
Yeah, so it had basically said that they had good earnings. They reiterated their earnings guidance, and they said they expect to finish on the higher end of that range that they had initially given out. Also
an update on its number of customers, 45,000 new customers in the second half. That's on top of 34,000 in the first half. And just some greater detail there, earnings certainly to be at or above its guidance range.
And of course, today was the RBA minutes. It was out. Did you get any insight from that? I know, they had thought of hiking. In the end, they said, no, let's hold it steady. Any insight that wasn't expected?
Yeah, I guess they did focus on employment, which they appear to be concerned about, given they did reference the number of business insolvencies and how that's potentially likely to impact the unemployment rate, and they see that going higher. Yeah. You can see, and this came, of course, before that CPI read.
No, of course. And, data dependent. I think that's the chorus we will keep hearing from central banks around the world. Okay, let's have a look at some of the sectors today. Looking at energy, doing well. Australian energy stocks hitting a 1-month high, of course, on those strong oil prices. Woodside topping there, just up 3%. Santos 2%. You've got Beach Energy and other energy stocks, as we've said. All right. Real estate, that's another one. Yeah,
well, that's going the opposite direction, as you can see, all hit there, in particular Charter Hall coming up over 3%.
Okay.
And further to those REITs. Lendlease, in fact, it obviously benefited yesterday from its news that it's offloading. Well, that divestment, its overseas divestment, continuing offloading.
Executing the strategy
that they military housing business in the States.
Indeed. Okay, looking at BHP mining. So Dalian iron ore hits 4-week high on China stimulus bets, and we're looking. Well, some reaction there. So BHP, Rio, Fortescue, the big ones down today. South 32, they're up by 0.5 percentage point. Yeah,
Mineral Resources has tumbled. In fact, we're going to get into this with Martin Crab very shortly, some of the stocks that are under pressure, but Mineral Resources down about 33% for the year.
Yeah, indeed. And some of the other stories that we were watching today. So ANZ, we had said that they trouble for charging dead customers. We also had a change in the upper echelons of Bendigo and Adelaide Bank.
Now, Liontown Resources, this is odd, isn't it? Because those lithium stocks have only been going in one direction recently, and this is not where Liontown went today, off the back of news that secured a $250 million investment from LG Energy Solution to supply more spodumene for its Kathleen Valley project.
Oh, yeah. And then we have Ramelius Resources there. It has increased its stake in Spartan Resources. So now they hold around 18% in the company.
And Lovisa, it's come off today. End of year store numbers slightly below expectations for FY24. That's according to Citi. Could he put pressure on the stock given, how it's outperformed so far this year? All right, so let's get into what we're looking around at the moment to how it's transpiring on markets, and certainly also in the wake of that the minutes from the RBA. Martin Crabb joining us from Shaw & Partners. Martin, good to see you.
Good to see you. Thanks for having
Let's start with the minutes. Did you manage to pick it apart? Was there anything new there?
No, I think they just reiterated what we already knew. One is that August is obviously live. They're going to wait till they get the June quarter CPI on the 31st of July. They clarified that they didn't even talk about a cut. So the market going into the last meeting, there was some people saying there's a small chance of a cut, but obviously that wasn't even discussed. It was all hike or nothing. So they sort of confirmed that. Just this kind of same narrative we hear from all these central banks, how data dependent they are. They're not ruling anything in or out. We're just going to wait till we see the data. And they're obviously weighing up. They're still, Michelle Bullock, not so much in the minutes, but when she's speaking, it's all about inflation. Unemployment, we're kind of not that worried about because we want the labour market to soften, but we're not seeing enough of a softening that it's of concern. We're just all worried about this inflation data.
Yeah, interesting that they actually thought that a hike might be possible. Okay, in the end, here we are. And Martin, let's get to a couple of stocks. I know you have two in your sights. So you have IDP Education, which is interesting because it's linked to that hike in visa price, the fee. It's 125% hike. That's huge.
Yeah. So the government's obviously trying to slow some immigration down to take some pressure off the housing market because the Reserve Bank can put up interest rates as much as it likes, but if we've got 800,000 people coming to the country with nowhere to live, it's going to keep pressure on the housing market. In fact, rents is probably the biggest part of the CPI that's got central banks worried because it's just very difficult to do much about it. So we've had Canada put a cap on the number, Australia in the last budget, and more recently from the the review of student immigration is just cracking down on a lot of the numbers and people that are using a student visa to come into the country and then trying to find work after that. So IDP Education has gone from being a darling. Just this time a year ago, the market was expecting 22-23% a year EPS growth going out to 2027. That's now been revised way down. In fact, if you look at the trajectory of earnings over the next couple of halves, flat to lower earnings. So the market really has massively derated this from a earnings growth perspective. And obviously the share price is down. I think it's down something like 50% from its high, maybe even more than 50% from high. So the share price is hard, but it's still got reasonable growth. And we think longer term, I still think developing countries will want to send their kids to the best universities in the world if they can afford it. And there's always a percentage of the population in developing countries who can afford to send their kids to the best schools. And they are in the US, Australia, Canada and Australia, the top 4 markets globally. So I think IDP longer term is still a good story. It's just been absolutely bashed on the back of all this regulatory change.
Too early? Or do you want to see this sort of shake out a little more?
Yeah, it's sort of catching a falling knife a little bit. And obviously it was the most shorted or the second most shorted stock in the market. I think that started to change. We've put the toe in the water in some of our portfolios, Andrew. So we've started a position in IDP Education and it's just continuing to drift lower. And I just think at some point, it's difficult to find the catalyst for when these things turn around. It just gets cheaper and cheaper. But a couple of the stocks on that list of stocks that have fallen by more than 50%, you look at them now and they're the cheapest they've been probably since they've been listed. At what point do you go, right, I think the valuation's compelling. I can't pick the trigger for it to rally because when that happens, everyone will jump on board, but I need to start putting a toe in the water.
Okay.
Now, another stock you've highlighted is Domino's.
Yeah.
Of course, the focus has been on GYG of late.
Yes.
And we can talk about valuations there.
Yeah.
How do you see Domino's then, given, it's certainly fallen short of those growth expectations?
Yeah, again, another company that's been listed on the ASX for a long period of time and always seemed to have a nosebleed PE, so it was always too expensive, even though everyone loves Don Mage and everyone loves the management team and the store rollouts and all that sort of stuff. It's been absolutely smashed. I think it's had 7 downgrades in a row or something. The latest thing is cheese prices.
Yeah, I saw that today.
Cheese prices have gone up from $1.60 to $2 a pound or something, and it's the biggest input for Domino's. Using the same structure that we looked at IDP Education, if we go back a year ago, the market was looking for 11% growth. If we go back, even a bit sooner than that, 18% growth. Now we're looking at a 7% growth number from Domino's. So way less than it's been growing in the past, and probably way less than it's been guiding in terms of new stores and same-store sales growth. But the market's just completely fallen out of love with this stock. It's drifted another 2.5% lower today in a pretty soggy market. And again, Andrew, I just think it's one where the valuation's now getting to a point where it's about as cheap as it's ever been relative to the rest of the market. And yes, the earnings growth may be lower than we thought it was, but it's still quite robust. Just think the outlook for the earnings profile for the Aussie market is pretty subdued. You got 1 or 2% growth for the next few years. So if you can find a company that's growing at 10 or 11% like these two stocks are, maybe it's time to start putting the toe in the water. Domino's is not one we've pulled the trigger on yet in some of our portfolios, but it's starting to look compelling.
Okay, and we're going to look at something that I personally am interested in, the French elections, and you're paying attention to that and impacted market. We saw today that the markets were reacting too much to the first round, but we'll see with the second round. A couple of Frenchies in the newsroom. So what's your reading on the impact of this?
Yeah, it's funny because normally you go French elections, who really cares, unless you're going there on holidays. We do have two stocks. Ramsay Healthcare has a big French healthcare hospital operation, and they've been knocked around a lot by industrial action because the healthcare workers in France are notorious for them, and the teachers and the rail workers.
And it's summer there, that's when they protest.
Yeah. And their football teams in the Euros and all that sort of stuff.
Yeah, of course.
So there's a couple of factors there, but normally you wouldn't bother about looking at the French election. But it has been a policy of Marine Le Pen's party to look at privatising some privatised assets, to look at nationalising privatised assets. And the toll road that Atlas Arteria runs, the APPR, is by far their biggest asset. And so there's been a steady drift higher in the yield, i.e. the price has been falling. So the company's sort of guiding 40 cents distribution. They've just done some restructuring to repay some debt and to make some cash available to continue to pay that dividend. But this stock has not been on this yield, even during COVID when everything got smashed. So it's starting to look again, if you believe in the sustainability and you don't think the company will be privatised, then that Atlas Arteria does look pretty attractive. So just interesting, on the Aussie market, here we have a stock that's almost a pure play on the French election.
Yeah, you might want to see the second round of voting before you actually make a decision on that particular stock. What's going on with the far right, or certainly conservative side of politics, wanting to renationalise things?
Yeah. And we're seeing it. It's interesting. We're seeing that swing to the right with female leaders. So we've got Italy now with arguably a far right. Marine Le Pen, obviously, depending on the outcome of the second round of elections, looks like she might be able to form some sort of government. So we're kind of seeing this swing, and obviously now looks like Donald Trump's a red hot favourite. One of the reasons the REITs stocks have been weak is the US bond yields shifted higher because everyone's figured it's going to be Trump and he's going to spend more money. It's going to be inflationary.
Yeah.
Exactly.
Yeah. Right. Well, do we take bets on that?
And one that's not swinging to the right, the UK, you're watching the UK elections as well?
Well, that's going to be a whitewash, right? So it's a question of how far the Conservative Party gets wiped out. And, it's interesting that here we've got one country swinging all the way over to the other side, right? So the Labor Party is going to have a record landslide, and yet it's right-wing parties in France and in Italy and arguably in the US as well. So polarisation. The markets when the country's got checks and balances like the US and stuff, it's like less of an issue on who's in government. But in some countries, it's, countries like Turkey and places like that, you end up having a person who just controls the whole place. That's what markets don't like.
Meanwhile, in Australia, polling indicating it's the independents that are actually gaining control, gaining the ascendancy, I should say.
Gaining share, yeah. It looks harder and harder. I mean, this is a global shift. It's harder and harder for single parties to rule on their own. We just got this fragmentation, whether it's the Teals here or the Greens and the Labor Party. We're getting this fragmentation of voting, and it's harder and harder and harder for governments to form. Or for parties, to form government. So it's just something that investors just have to deal with. And, I suppose for listeners, be aware of the political risks in your portfolio. Be aware that, if there's a change of government in France, that your Atlas Arteria shares could be impacted. So really worth looking at all the geopolitical issues that are out there.
I love it when politics and the markets
there's so much more to come, Tessa, as we head towards that big one in November. Martin, terrific to catch up. Thanks for joining us.
Good to talk. Thank you.
Thank you. All right, so as we were talking about earlier, our stock of the day is
Superloop. It is indeed, given the expectations for results to come in at the top end of its guidance after adding a record number of customers in the second half. For analysis of the stock, we caught up with Josh Barker and Philip Pepe for their views.
Obviously a really good update, and the share price reacting as such. I think there is more upside to come from it. Wouldn't probably put it as a buy, but more a hold at these levels. That white labelling with Origin, potential to add another 150,000 customers, so they're continuing to increase their market share.
I would take some money off the table at current levels, given that.
Oh, you'd take profits?
I would take profits.
Right,
so
okay.
I wouldn't call it a sell, I'd call it take profits because it's had a good run. That was a trading update. Stock's up 3 or 4% today, not 10% or more, so the market was kind of expecting a good result. You flagged, some people mentioned it last week.
Yep.
For me, you've had the market update. I would take profits and put money into something else.
Okay.
That's a view on Superloop, our stock of the day. All right, so Tessa, we're at the time. We can take a look at how the market has settled. Let's start with the leaders, and all about Liontown Resources today, that getting that boost from LG in terms of its funding for its Kathleen Valley project. So its shares certainly leading the way, up more than 8%. Mm-hmm. And also the coal miners doing very well. In fact, check out the website because there were a number of analysts talking about those coal stocks and just where they see those valuations at the moment. Woodside joining the party in the energy space.
All right, let's look at the other end of the market. Lovisa topping this list, down 4%. IGO, Nine Entertainment, Calcium Group, and Charter Hall on the list as well.
Now in the small space, let's check out the movement there with Waterco up around 18%. Anson Resources also doing well, along with SmartPay. On the negative side, Recce Pharmaceutical. Let's take a look at what's happening, down 19%. Melbana Energy also taking a bit of a hit as well, along with Imugene, which came off 9%.
Okay, let's have a look at what's happening overnight. So we have quite a few coming from Europe and the US, CPI flash estimates from Europe, and Lagarde will be speaking. I believe we also heard from her last night. She just said that the ECB is not in a hurry to cut rates.
Data dependent.
Data dependent. Yes. Data dependent. And Fed Chair Powell, also waiting for that.
Yeah, that's going to be fascinating. Markets in the US very much looking forward to what he has to say. Of course, a bit of an unusual week because we do have the Independence Day holiday this week, and then we've got the PCE. Sorry, not the PCE. We've got the non-farm payrolls number at the end of the week. Locally, though, we've got commodity prices from ANZ in New Zealand. Now, retail sales will be a closely looked piece of data tomorrow here, along with building approvals, and out of China we get the Cation Services PMI.
All right, so shall we have a final look
at
where the market
up on this
has
Tuesday? As I said, not really beginning the new financial year all that well.
Yes, so it's down on the SIBO 200. It is down by 0.25%. Sit around the same on the ASX, down 0.42%. And let's look at the sectors. Energy is a big bright green.
Yeah, it's certainly the outperformer on the ASX. It's up more than 2%, and utilities just managing to edge into the green there. But on the negative side, the REITs leading the losses, and Martin was talking to us earlier just about the effect that those jump in bond yields overnight with the prospect perhaps of a Trump presidency again, and how inflationary that could be, and therefore we did see those yields rise. All right, should we call it a day?
Yes, we shall, and maybe tomorrow will be a better day. We'll see. Join us again tomorrow, 9:45.
See you then. Bye.